Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His websites pifinancial.com and polarfuturesgroup.com. Welcome back to the show, Drew.
Thanks for having me on, Jim.
Drew, the oil market made history this week by going negative for the first time ever. Can you tell us what happened and what's it all about?
Yeah, that really grabbed headlines, and it, surprised not only the, most experienced oil traders, but surprised the whole market to see that, oil prices, one could go to zero and then cross over and go all the way through zero. So it's important to understand the structure of the oil market to understand how it could go negative. And we trade the oil futures on a monthly contract. And at the end of that monthly contract, it goes into what's called a delivery period, where the big oil trading firms actually make and take delivery of crude oil, and the WTI contract that we trade, that's done in Cushing, Oklahoma. So the contract that went negative was the May contract. So it was only in the last 2 days of trading, and I will stress, in that time period, you're not going to have most regular traders trading in that crude oil contract. They would have to do what's called a roll, where they would then move over to the June contract. It's now the front-end contract. So it was the big traders, for the most part, that were in the May contract, and they're going to be the ones that actually have the capabilities and the setups to be able to make and take delivery. So it wasn't a whole lot of retail-type traders in that trading account when it went negative. There was no way for most retail people to step in and buy it at negative prices, even though they went very negative. So the structure of the market was that there wasn't a whole lot of volume or participants there, and I think a few people got caught the wrong way, and when that happens in the market and other market players know it, that's when the market can just go no bid, like we saw on Monday. So a truly historical precedent. It didn't necessarily mean a whole lot for oil prices. On that day, the June contract was still trading at about $20 a barrel. So it wasn't like all oil was going to zero. The back month that we still trade now, June today down at $14, did get dragged lower, but July oil is still at $21 right now, September oil at $26, that sort of thing. So not all oil went to zero. It really was just that final 2 days before it was getting delivered. And the reason why that's happening is normally in those final couple of days, there's people that have, giant storage facilities in Cushing that can bid and take the oil as it gets to lower prices going into delivery. Well, those storage facilities are full or nearing full or already contracted out. So there was less available bidders to be able to buy oil, even at negative prices, to be able to store it, because we're running out of storage. And that's been the real story in crude oil, especially at the front end of the curve, is, we've had this gigantic demand-destructive event in COVID that, has really sapped the demand of the refiners and everything, every user of crude oil, to the point where, we're still just producing too much of it, and now we're starting to run out of storage. So that is the real story. Again, the negative aspect of it is extreme, although I still think that as we go through this next month and as June goes into delivery about a month from now, we may be facing some of the same issues where storage is full and possibly even fuller, and demand isn't there. So it's just going to be a matter of how much production keeps coming down the pipe and whether or not we have anywhere to put it. But it truly was a historical event. I mean, it is also very nuanced in that it was only in the front end and again in the last couple of days before delivery. Not all oil is that cheap across the curve, but again, in the front end where there isn't a whole lot of demand and more importantly, there isn't a whole lot of storage for that oil, you run into the dynamic where there's just not a lot of people willing to bid that crude oil market up. So hence seeing the prices go drastically negative.
Could there be real money in building storage facilities, or would it take so long to do it, this whole crisis might be over?
Yes, I mean, it's definitely a possibility. Again, it has to do with time frame. Can you build it fast enough to be able to take advantage of this huge oversupply because demand isn't there? So again, if you follow the oil curve out, as I just listed earlier, prices going out into the fall are already higher, and that's on expectations that demand will start to come back to a more normal level. You know, we'll be able to, eat through this big storage glut that we've come up with. So again, if you're not able to store the front month very quickly, you're already seeing some of that benefit or that premium or the term structure of the oil market sort of take that opportunity away from you. So, I think now what we're seeing is other oil traders, storing oil on the big oil carrying vessels. So there's a lot of floating oil storage. The U.S. has the Strategic Petroleum Reserve, which does have capacity in it. Trump, actually a couple of months ago had talked about buying oil for the U.S. Strategic Petroleum Reserve. That got kiboshed in the recent relief bill. There wasn't funds for that. So there is the possibility that comes available for storage. And he's talked about either renting it or, again, buying oil for the United States government, which, again, I think at these record low prices could definitely make some sense and actually be a profitable endeavor for the government to take. So it's all about availability of storage, but right now you're seeing any available storage, those prices are getting bid up aggressively. So it's always about, the risk-free arbitrage of being able to buy oil cheap now, store it, and sell it in the front month at a locked-in price. But if that storage is getting more and more expensive because there's less of it, so it's getting bid up itself, then that arbitrage in the oil market is less likely to take place. So, is there a company out there that can build oil storage facilities, first of all, where they need to be and fast enough to really take advantage of this? That might be an unlikely endeavor, given that we think, demand should start to pick back up in the coming months. So possible, but maybe not very likely.
Well, I know there's a chemical solution you can put in crude oil that turns it into a hard jelly-like substance that you can put in a shipping container. Perhaps that's the place to store it, because right now with worldwide shipping down, there might be a lot of empty containers around.
Well, when there's great profit opportunity, that's the best seeds for innovation. So if there is something like that comes available or something that's close to being available, these sort of circumstances push those forward. And again, I can't speak to anything that I know on that front. All I know is that when there's incentive to do something, the ingenuity of the people working in that industry can quite often come up with a solution. So maybe there will be something like that come about.
We'll have more with Drew Zimmerman right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Drew Zimmerman. Drew, given the situation with a huge oversupply of oil, do you think investors should stay away from investing in petro energies?
No, I've had a lot of calls from prospective clients and existing clients, asking the best way to get into oil, how to get into oil. And, I mean, without being too blunt, it really comes down to for a regular retail investor, it's a very difficult space to invest in right now. If you're going to be trading in the futures market, as I do, there needs to be a level of sophistication where you understand the different delivery months and the term structure. I've guided some clients where we're actually long some of the back months of oil. I do think there are some good opportunities down at these levels. And if you expect that demand does come back over the next several months, then we think there's some good pricing opportunities, especially now that you've got the biggest oil producers in the world working together, rather than a month ago when they were having a price war against one another. That should provide some stability as long as we can understand where the demand picture is going to be over the next couple of months. But outside of working with somebody that understands the term structure of the market, it is difficult. There is an ETF that's become hugely popular. There's been billions of dollars have flowed into the USO, that's the United States oil ETF. That product, however, if you're buying into that, and they have adjusted how it's invested, it used to be just invested in the front contract month. Now it's spread along the front couple of months. But as I was saying in the first part of this interview, with the front months being so much cheaper, it continually has to sell the front month and buy the next month or the next couple of months at a much higher price. That creates what's called the negative roll yield. So given that amount right now could be anywhere from $5 to $10 between the contract month, that's going to be a huge headwind for that ETF to come out money ahead. To take, $5 a month, for example, if you rolled $5 a month for 6 months, that means oil prices could go up $30, and that ETF is only going to be breaking even. So you could have the front month oil, which is now June, go from roughly $15 to roughly $45 when we're trading that next front month, which would be 6 months out, so say the December contract. If that's at 45, the USO might just still be at the exact same price it's at today. So you're going to have some retail investors that maybe don't understand the structure of underlying they're actually buying the underlying product in that ETF and how it works and how it has to be active. So it's not just like buying a stock that you buy it at this price and hold it and hope it goes up. There's managers in that fund that are constantly coming to the futures market and having to roll, and unfortunately right now paying a very high negative roll yield, which can really eat into any prospective return. So like a lot of structured, ETF or ETN products, I think they can work as a trading tool, but utilizing it in that sense rather than trying to, just buy it and hold it for 2 years and say, if oil goes from $15 back to $50, I'll be rich. It's not going to be that easy. It's a very tough market to invest in right now. So unless you really know what's going on, I've advised a lot of clients to just stay away from trying to invest in it and or looking into the energy companies that they like that can continue to do better, that maybe don't have a lot of debt on their balance sheet. That's not my area of expertise. I'm in the futures market, but again, just advising some clients that, this is just too tough to handle. Again, the price swings are very dramatic, so the gains and losses can be very sharp on a very short-term basis. But I think there are great opportunities for those people that are sophisticated enough and understand the risks involved with it. But again, it's a very tough environment to be investing in the energy space right now.
We'll have more with Drew Zimmerman right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, what's your view on the equity markets right now?
Yeah, Jim, we had obviously the very large sell-off from the end of February into the end of March. And then we've had a very strong bounce, or rebound. So maybe that term alone tells you my view on the market, where we rallied strongly for 4 weeks. But I do get the sense that may have been a relief rally in what could be a more sustained bear market. And I'm looking at a lot of different instruments that feed into that opinion. So the equity market is doing a lot better because, one, maybe we got too panicked in the selling going into the end of March, which I think is very likely. And second, the central banks and the governments around the world have done everything that they can with massive stimulus programs, low rates, QE, the Fed and some other central banks going into bond markets, and not only investment-grade bond markets, but also willing to step into some junk bonds, which is truly unprecedented in supporting the market. So with that confidence, investors have piled back into stocks and run them back up very dramatically, to the point where the NASDAQ was even green year to date, which is truly impressive given the economic shock of what's happened. But when I look at the oil market, which is telling us that the economy basically ground to a halt, and with oil prices, going to zero and or negative, and still front month prices being, dramatically lower than they were at the end of last year, that's telling a picture that the global economy is a lot worse off. We've really stopped a lot of things. When I look at the interest rate space, we've got the U.S. 10-year right at about the lowest yields that it's ever been. It's slightly up off those levels, but not by much. So, that's telling me a story as well, that if interest rates are going to continue to stay low and quite possibly go lower, which I think they could, I think we could even see the U.S. 10-year go to zero. It's not unthinkable. The German 10-year being negative for the better part of the last few years. So your other instruments in the global macro are telling me that maybe, stocks are priced for things being as good as they were at the start of this year. And then we had the COVID crisis, but again, the stimulus has helped offset some of that or a bunch of that. But the other macroeconomic indicators or markets that I'm looking at tell me that things aren't as rosy as stocks are hoping for. So I think that when we start to see more economic data come in, not necessarily for the month of March, like a lot of our data has shown now, which again doesn't capture a whole lot of the shutdown in North America especially, but as we get into the April numbers, it's going to be a little bit more sobering to see how big of an economic shock this has been. And for me, that means that the stock market at these levels is likely overpriced. So I'm positioned for stocks to go lower. I'm positioned that way in currencies as well. I think the U.S. dollar could continue to strengthen. I'm positioned for the U.S. Interest rates to continue to move lower. So I have a fairly bearish view at this time after the 4-week run-up. I was even a little bit early getting into that last sort of week where we were topping out. I was already switching to the bearish side. But the start of this week rolled over. We're bouncing again here today after the U.S. passed another $484 billion in stimulus to top up the small business loan program. I'm going to be very curious to see. We've got some early looks at the April PMI numbers sort of throughout Japan and Europe and the U.S. tomorrow. So if those numbers come in as poor as I think they might, I think we may have a bit of a reality check coming back to this market where I think we could see it move back lower from here. But at the same time, you've got to be very cognizant that the central banks and the governments have just done a massive amount, and very, very quickly this time, of stimulus that's going to continue to support this market. And I think they're willing to step back in even more if we were to see equity markets roll over from this point. So as much as I'm bearish, I don't think it's going to be a long-term event. I'm looking maybe into the start of next month. And then it's going to be a fluid situation with, number one, what's going on with the virus itself. And hopefully, we're getting through that and getting better. But also, maybe more importantly for stocks, how much stimulus is going to be used to offset the economic impact.
With that view, what's your outlook for the Canadian dollar? It was stuck around 75 cents, it seems, for years, now around 70.
Yes, it had a sharp break lower as we went through the first big sell-off in the equity market. Canada is what I would deem sort of a risk currency, a commodity currency. So, one, we had oil prices dropping dramatically. Everybody's seen the stories where, not only WTI went negative, but Western Canada Select is still trading around negative, if not in negative territory. And that's a big export for Canada. I would also say that, as a country, we were coming into this crisis on a little bit of a softer footing. We had oil prices already soft. We also had the shutdown Canada issue, which was impacting a lot of our exports already. So going into the COVID crisis, we weren't in, a very strong position. And with currencies, it's always a relative game. So I do think that if we see this U.S. dollar strengthen, again, it may be a case of, the cleanest dirty shirt in the pile. But I do think that we're going to see the Canadian dollar roll back. Even if crude oil is doing a little better, it's still at extremely low levels where it's not hugely beneficial for a lot of our energy companies here in Canada and the current account as we ship our oil down to the U.S. And again, they're likely to be taking in less and less given the oversupply market down there. So I think the Canadian dollar is at risk of going lower. I think that if we see equity markets roll over, we go to what I would call is a correlation of one, and that is just a simple risk on or risk off day. And if equities are going lower, that tends to be more of a risk off day. And in that environment, I think the Canadian dollar would go down on those days. And again, if we do break lower, I think we can very easily sort of test that 68-cent level that we were at only a few weeks ago.
Drew, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. Check out his websites, pifinancial.com and polarfuturesgroup.com. If you have any questions for Drew or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.